Ladies and gentlemen, Keiki here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down 1.3% there. On the S&P, Nasdaq down 2.5%. Semiconductor also down close to 2% there. Dow held up better, 0.5% negative. Russell 2000 1%. Looks like Russell 2000. Actually, the transport is printing green today. Banks down, energy down, biotech got hit today, almost 3% negative. Healthcare down 1.5%, home builders down 0.5% there. Utilities green today, right? So it looks like transport and utilities, they're the only two sectors green today in this bloody red day. Retail down 1%, emerging market down 1.5% there. Bitcoin down 5%, gold, silver, miners. They're holding up a little better there, compared to the other sectors that we just mentioned. Dollar pretty much flat, oil down, treasury bond up. VIX popped 15% today. Let's look at the S&P 500 ETF. Spider, 65-minute chart here. So and for the entire day, not entire day, for the 2 hours or so, what we witnessed is that the short-term moving average was acting as support. You can see all day yesterday, and then first hour today, and then I remember I was tweeting things out earlier this morning, and the second hour it was kind of flirting with this level, holding up, and then I guess like the last half of the second hour we lost it. You can see how quickly, soon as we lost this level, you see that kind of a floodgates opened up, and you see that long red bearish candle, right? It is not a coincidence. It is not a mistake. It is not a random occurrence that once we lost it, right? Because I think what happened was when we saw this gap up right here, these short-term and micro-term traders, they chased it, right? And then what do they usually do? You go long here and you place stop just kind of underneath it right here, right? And so when the stops were getting taken out, right? And that was a second hour price action. And with that, we saw that downturn. We lost that short-term moving average. Bulls tried really hard, lost a couple days here, a day and a half or so, trying to reclaim that short-term moving average, to tame that short-term moving average to support the bulls once again. But now that we lost that short-term moving average on the second hour, you can see third, fourth hour, little bear flag, and then you can see the last hour, we continue lower. Looks like we ignored that. I wasn't watching, so I don't know how it played out in the intraday, right, on the 6th hour, but it looks like we kind of ignored that my midterm moving average flushed through, and you can see that's the kind of that recent pivot there that we saw this thing respecting back in 11th. So that's kind of looks like what we saw that support on the last hour. So it looks like we lost the short-term moving average, we lost the midterm moving average. And the sentiment, is now back to kind of hectic sentiment here. Now that buyers were not able to reclaim that short-term moving average, so that the benefit of the doubt until we can able to reclaim that short-term moving average, we have to give benefit of the doubt to the sellers at this point. And this is something that we talked about yesterday, that we saw that shenanigan incoming signal. We talked about that right here. You can see right there, because the problem was bulls were not able to push that oscillator all the way to the top like we saw right here. And you can see this thing kept going higher, but we were not able to do that. And then we saw that very fast cross back down instead of seeing that pancake pattern where, it flattens out and then trend continues. And so this jittery action, this is kind of what I'm talking about, that when you see this kind of a short-term consolidation pattern, man, it can break out on either direction. I said that yesterday. This is why you do not rely on these. Sometimes you break out to the upside, sometimes you break out downside. You never rely on those, especially in this kind of market where we've been in, right, last several months here. Market has been in this kind of very choppy up and down move. I think market is consolidating, kind of digesting its gains from 2021. I think we may continue in that. I think this month of January we might continue to witness lethargicness and hecticness unless we see bulls kind of getting back up here. So 463.30. If you're a bear here, if you don't look for lower prices, obviously you want to break below that 463.30 there. And keep in mind though, my long-term moving average that we did find support about several days ago, trading sessions ago, as you can see right here. The island bottom reversal gap still open. So maybe bears want to kind of retest that. If we do see this thing getting up here and this becomes some kind of that higher low and we break above this peak right here, the swing high, this might be the cultivation of higher low. But I can't say that yet until we see the confirmation. We're in that vicinity of higher low, but we don't know if it's going to be higher low as of today until we do see some evidences of that. And that oscillator right now is curling down similar to this right here. So, you can see how when that happened here, things got pretty chop. You know what I mean? So I expect this shenanigans to continue into tomorrow and probably next week. I'm going to come back for you. We're going to reassess the situation. Enjoy your evening and good luck trading tomorrow.